if this truly is a stock of a million shareholders holding a small amount each, just like Pete said, they may frame that, put it behind their desk, and never touch it. Like literally never touch it.
And that's, I mean, I want to do a deeper dive on this volume when we start seeing things, but 16 million shares today. I think that's close to $1 billion exchanged hands. That's not nothing. And I think I got to take a bigger look when I'm going to do this for us guys. I'm going to export all the bids and asks and the questions, and I'm going to look at what the volume is and the average trade, because my gut is telling me it's smaller than we think. And if that is the case, these people will hold. And you're also protecting, this guy you want in power, this guy is standing up for something for whatever reason, you're a bag holder, you're protecting them against shorts, right? Like who's gonna have kind of the cojones to short this against, like I said, 74 million people? You ever seen the rallies? There's no Pubco CEO in the world that could get that.
Okay, welcome back, guys. Today is episode number 16, and a ton has happened in the last week since we've recorded. Last time we were actually covering the live Reddit IPOs that happened, which was initially a screaming success. It's fallen very, very hard over the last couple of trading days. Even so, you'd still chalk it up to being a very successful IPO. Today, we're going to talk about a different media IPO, which is, of course, the Trump Media and Technology Group IPO. Pete, if you had to choose between taking Donald Trump's hair or his app, what would you go with?
That's a lose-lose decision. But I guess given his age, I would probably take the hair at that age. The app isn't for me.
And we'll talk about the app too. I've been playing around with that, and it's been wildly entertaining. I mean, another topic we're going to talk about is the legalization of that sticky, icky green stuff in Germany. Declan, I don't know if you have age to try that, any of that?
It's one of those things that I think it's available, and I think you got to try it once or twice.
And Declan, I'll give you credit, man. He's producing some new reports called the Beyond the Edge report. I guess it's basically behind the scenes of our notes, including all the financial data that we have on these companies, and more importantly, our specific thoughts on the stock afterwards. Are we bear, bull, neutral? Do we own the shares? Will we buy the shares? Are we shorting the shares? All of that is going to be gated for premium subscribers. It's only $10 a month, guys. So, however, we're giving you the first one for free. We really want you to see it. I want to show off Declan's work. So we're going to link that below. So without further ado, let's jump into the topics. I want to start with the Trump story. I think that's captured media attention. Certainly one of the most interesting things going on. So what can I tell you about that? Donald Trump's media company, Trump Media and Technology Group, surged in its Nasdaq trading debut, at one point reaching a valuation of nearly $8 billion. So it is very juicy. Few key points. Stock actually surged 59% on its first day. It's continued higher since then. This is despite reporting an operating loss of about $10 million for the first 9 months of 2023 on revenue of only $3.4 million. Second key point, company's rise in valuation is probably attributed to enthusiasm from Trump supporters, which is definitely positioning this as another potential meme stock. Point number 3, the merger with the SPAC, which was called Digital World Acquisition Corp, faced a lot of delays. It was initially announced in 2021. However, this is a SPAC full of $300 million. So this is going to be rocket fuel for the company. So Declan, the share price of Trump Media and Technology Group, as I said, had a massive surge in valuation, which, as I also said, is very likely attributed to very, very supportive Trumpsters. I don't know if they have a nickname, but how might this impact the company's long-term prospects and overall stability in the market?
Mm-hmm. Yeah, so often the case when you introduce a new company, especially a polarizing business like this, it seems that the market is quite divided evenly across the assessment, but it's one thing, and it speaks to where Trump Media is today, is that most of the people online, at least from what I'm seeing, do not believe whatsoever that Trump Media and Technology should be worth what it is today. And so when you look at this business from a fundamental standpoint, you can see that the company has about 5 million users monthly. It generated 4.6 million revenue in the trailing 12 months, and it lost more than $40 million. On the other hand, our other beloved Reddit has about 73 million daily active users, generated $804 million, and lost about $91 million in the trading 12 months. And I would argue that that stock is overvalued as well. So, but like you said, Kev, how might this sentiment affect the stock? Well, that's just it. I believe that this company is being totally propelled on those people that are bullish and supportive of Trump. But when you want to assess a company like this, and in reality, it is a social media platform, these companies rely on network effects. And when you look at Truth Social's network effect, it is dismal. And why is that? Well, it's isolated to a group of people that share the same political beliefs. And this is going to discourage other people from coming on board. And ultimately, when it comes to network effects, the more people that you add, the more valuable the platform gets. On top of that, how many advertisers are going to be willing to perhaps join this if it is so polarizing with what the platform promotes and does on that front? The irony of it all is that the company and Truth Social actually outlines that they are a social media platform that encourages an open, free, and honest global conversation without discriminating based on political ideology. But when you have somebody like Donald Trump, who is obviously a political party leader and also somebody whose beliefs are very ingrained to one side of that political spectrum, then how are you going to encourage and engage other people to join in that debate? So from a monetary standpoint and how this all translate, I don't think they're going to be able to grow as effectively as they might hope. And on top of that, a valuation anywhere from 7 billion to 9.7 billion as reports have came in, and obviously the stock has fluctuated, just does not seem sustainable whatsoever when you're only making about $5 million in revenue.
Pete, I want to hear your comments on this, but Declan, you asked what advertisers would put their ads. Regeneron, remember that?
Oh, no way, hey?
Wasn't that his cure for? Anyways, there's one, at least one.
There you
but
go.
Pete, what are your thoughts on this?
There's absolutely so much to unpack here, and I will talk to Mr. Fundamentals here. Whatever your checklist is of fundamentals, this one will miss absolutely all of them. This is a trend stock. This is what you kind of need to look at. And I think we might have to take a step back and understand the overall repercussions of this IPO is likely broader than anything we've ever seen before, and the outcome of it. So I'd like to kind of take a step back and kind of maybe explain why this was so imperative for Mr. Donald J. Trump. Political views aside, we're all Canadian. You know, if you're an American listener, you know, it's not really that big of a deal who you guys vote for. We can't vote there. So this is us just talking about a stock and business. But in terms of art of the deal and what he did here, I'm fairly impressed.
Yeah, that was wild.
This was a man that needed to come up with, at the time, around $475 million to stay out of jail. That was his bond at his hearing. And, you know, Declan, maybe when you ended up in the drunk tank once in your life and you got out of it for a couple $100, they told him $475 million liquid. I don't know who has that kind of sitting around as an individual who can just kind of come up with that cash. Because, like, even if you're, let's say, CEO of and founder of a $20 billion company and you $30 billion and you still might own 20% of it, the odds of you being able to pull that out liquid are fairly bad, because once you start selling, your valuation will drop. And I mean, it was very impressive how he was able to kind of pull this off. Now, I think he was fortunate in a sense that the bond dropped to around 175 million, and he was able to kind of take this public and pledge his stock for collateral. Because even as much as 10 days ago, people were saying, how is he going to come up with this money? We all know he has real estate holdings, he has business holdings, he has all these things. Taking out another loan against something on Park Avenue in New York is not a quick or easy thing to do. And I think you kind of got to give kudos to a guy that really pulled another one out of his hat. Politics aside, again, this is someone who underwent a very bad recession in the New York real estate market, had over leveraged himself prior, had really, put his back up against the wall, has seen bankruptcies, has taken things public. He did all those things. And now he really kind of put this out there and really is getting support from the 74 million Americans who voted for him in 2020. So this is well beyond a stock and nothing really I've ever seen before. And I don't even think, I don't know if you guys want to get into why he even owed the money in the fraud case, but that's interesting story on its own.
I mean, we could probably unpack that over a few episodes, I imagine.
Yeah.
And yeah, good point. It's right in the nick of time did he coordinate this, and it's pretty amazing. I downloaded the app. I've been playing around with it, and from a consumer perspective, I'm very, very supportive of these apps that are promoting free speech. I think that the platforms we use every day have just gotten far too focused on censorship and telling us what media is safe for us to consume. And I think it's gone far too, it's gone way too far. So for that reason, I'll use X. I won't use Threads. I downloaded Rumble, though I don't really use it. And I downloaded Truth as well to take a look at it because, like I said, I support the mission of free speech. And if there's a new player going against big tech to try to shake things up, I'll support that. If you spend some time in the app, it's entertaining, I guess is the way to say it. It's very, very obvious it's a Trump app. If you look at the accounts that they suggested for me to follow, I looked at the latest 5-10 posts of each one, all wildly right-leaning, very Trump supportive. It's clear who controls this app and what kind of media they want you to see. You could also make that argument for TikTok, but that's another discussion. So I support the concept. The app, perhaps, I don't think I'll end up using it long term, though it's clean. It's a good user interface. They did a good job. It seems to be a well-functioning app, and I think a lot of people will certainly use it. Does that come close to justifying whatever the valuation is, 6, 7, 8 billion? Obviously not. But when you look at some of the posts, not just on Truth Social itself, but across other apps, it's very different from an investor movement. It's let's support the Donald.
Yeah.
Saying let's buy, if everybody buys 4 shares, for a few $100s, whatever it is at the time, and sits on them, this will keep our, beloved leader out of jail. So just like you said, Pete, it's a very different playing field out there.
I think they'll hold. I think if they could print out that share certificate and put it behind their desk, they would, and kind of emblazon it, because this is something that literally kept this guy out of jail. So this is beyond just owning a stock in a company, and I don't think there's going to be anything that can value it. I concur, though, on the kind of freedom of speech and censorship, which is, this actually did have, some interesting interests off the bat, and people were kind of interested in migrating to it and had those users. I've, checked out what I can see. Users aren't going the right way, functionality wise, but that actually aligns almost immediately when Mr. Musk said he was going to be taking over Twitter. So overall kind of interest in this app has been declining since October 2022. And that's kind of when I think he took it over on October 27th, 2022. So people migrated back to Twitter. And even the context himself, that, the president was actually banned from these social platforms post, I think, losing the election, but while he was still acting president, which was, a story in itself. And Elon's come out and really leaked a lot of stories about kind of the collaboration between, previous people at Twitter and censorship, and really censoring one side. So I think a lot of people whose voices weren't being heard, or they were trying to post something that was getting censored and taken down, or even worse, shadow banned, needed somewhere to go. But since Elon kind of came back, they've been migrating back to Twitter, which is not good for Truth Social, but that does not matter in terms of the stock price and what people are buying it for.
Right. Well, I think it's interesting, and you guys talked on some key points in terms of, obviously Trump's fans are very loyal to him. And this is really the first time I've ever seen in the market where a stock has largely benefited from loyalty, aside from maybe Tesla and all those big fans of Elon Musk. But I think you got to pose it like this, because ultimately, okay, let's say they're holding and they're trying to give Trump his best chance of making out of this. My understanding is, for one, that he actually has to hold his shares for at least
Mhm.
6 months before he can liquidate them. But then on top of that, we have an election in the US coming around November here. And you got to ask yourself, well, what happens if Trump loses the election or he's unable to meet these legal fees and the charges related to the fraud case, or he goes to jail? In that sense, Trump is now in a position where he's losing much of his influence. And let's say, particularly from the election standpoint, if he loses this election, well, it's most likely his last run or last chance to really make a push as the leader of that country. And what happens then to a company like Truth Social and Trump Media when somebody like Trump loses his influence? And then, like you said, all these bag holders who are basically like, well, we're going to support our guy. Well, now they're left with somebody who has significantly less power and influence than he does. He also, or they also own a pretty poorly run business, and like from a fundamental standpoint, and then they're just kind of left with nothing. So I don't know, just bringing it back from that investment standpoint, it's hard to believe like the bull case, other than if you're trying to speculate on, okay, well, if Trump wins, maybe this thing skyrockets, but there's no like real tangible evidence that is going to like point otherwise to making this investment and feeling confident about it.
It's, oh man, there's so many things to say about this. I can think of two IPOs of recent memory in the last few years, and without getting to details on what they were, the one major difference between them was the share structure, where one company was heavily reliant on larger institutions that took very large multi-million-dollar blocks of shares. The other was very reliant on the everyday retail investor, and they had a ton of retail investors, each putting in $1,500, $2,000. Stability on the stock was night and day, because as things turned, in this case, against the plant-based food market, the larger institutions liquidated 100% of their holdings, and they didn't care what price they got. They just knew this company was going under. They wanted to get out. It absolutely devastated the share price. With this other company, these investors, though they saw similar writing on the wall, each of them had maybe, like I said, $1,000 or $2,000 worth of stock. It wasn't going to break the bank for them, and they were much less panicked to get rid of it. And the stock held on for much, much, much longer. So if this truly is a stock of a million shareholders holding a small amount each, just like Pete said, they may frame that, put it behind their desk, and never touch it. Like literally never touch it.
And that's, I mean, I want to do a deeper dive on this volume when we start seeing things, but 16 million shares today, I think that's close to $1 billion exchanged hands. That's not nothing. And I'm really, I think I got to take a bigger look when I'm going to do this for us guys. I'm going to export all the bids and asks and the questions, and I'm going to look at what the volume is on the average trade, because my gut is telling me it's smaller than we think. And if that is the case, these people will hold. And you're also protecting, this guy you want in power. This guy is standing up for something for whatever reason. You're a bag holder. You're protecting them against shorts, right? Like who's gonna have kind of the cojones to short this against, like I said, 74 million people. You ever seen the rallies? There's no Pubco CEO in the world that could get that could travel the country and get people to come out. So this is beyond, I think, anything we've seen. It defies any logic. No, a $5 million company doing 5 million revenue should not be worth in the billions. It should not be worth around what Reddit is by any means. There's no fundamental reason. This is basically looking at human psychology and geopolitical issues. And that I don't know how to assess. It's going to be interesting to watch.
Well, I think the trend tracker is probably going to come out on top in this one, because when we're looking at meme stocks, it's very much sentiment, momentum. What is the trend telling you more than anything? So I'd be very curious to see kind of your set of tools in action following this over the next, I'd say 5 months, because as soon as we get beyond 5 months, things are going to change very drastically. And we'll get into that afterwards for sure.
If this, if this keeps him out of jail, and it could be very interesting watching this thing go up to the election for sure.
Mhm.
And Declan, yeah, just to comment, no, he can't sell his shares for 6 months, but he can borrow against them. And
Right.
on margin, the more it's worth, the more he can keep borrowing and, leverage however he wants. So,
Guy
Yeah.
loves leverage too.
Yeah.
oh yeah.
Well, I think you summarized it well when you said it simply defies logic, and I'm always gonna have my trouble wrapping my head around a business like this, and ever like why would you want to make an investment like this? But to your guys' point, ultimately, like there is a position in the next 6-7 months leading up to the election until they find out where it could go either way, and you could make a lot of money on it or you could be left with nothing. And I think it'll be interesting what happens like after that point, because when the election, the outcome is determined, well, what happens beyond for Truth Social, and who knows.
And I know we got to move on from it. Sorry, but I know you said influence and he's going to lose influence. He's not, if he ends up in jail after he loses or whatever, he's not going the same way as anyone else, Declan. He's going to have his own thing. You think he's going to jail and he's going to put in general population? He's going to be tweeting. He's going to figure out live streams. He's going to have his own media in the cell. He'll be fine.
It's going to be huge.
Yeah.
I probably spent 10 minutes looking at fundamentals of the business, and then I got lost in the SPAC documentation. So I want to dig into that a little bit. I looked at many, many different filings, the first of which was the initial prospectus for DWAC, Digital World Acquisition Corp. And when they raised $300 million, an unbelievable amount of money. And what fascinates me is SPACs are somewhat of a new phenomenon in the US, but in Canada, we've had something very similar to this for a really long time. Capital Pool Corporations, that's one on the TSX Venture Exchange, and G Corps on the NEO Exchange, which function as the same idea of a blank check corporation. SPACs are just on steroids. They're a much, much, much larger version. But why people love putting these together is because if you're the sponsor of a SPAC, you get a very large position that can be up to 20% of the whole deal, and you essentially get it for free. So let me walk you through some exciting numbers here for our sponsor of this SPAC related to the Trump Group. I actually don't know who it is. So the next thing I got to figure out is who the specific person is. I haven't actually looked into it. I was just purely looking at the numbers. But over 7 million shares at the get-go were attributed to this person. It's actually higher, but I won't get into the details. But net, about 7 million shares, paid a grand total of $25,000. And that position is worth over $300 million today. And in the next 6 months, they will be able to start selling. But there's a bunch of terms that allow it to start selling sooner than that, closer to 5 months. And it's essentially exceeding all of those benchmarks right now. It's a certain trading price over a certain number of days. It has to be 20 days. So obviously we don't have that yet. And it has to be a minimum of 5 months. But once we hit the 5-month mark, there's a very, very good chance that we're going to see an absolute colossal amount
Fire
of selling.
sale.
Yeah, from everybody except for the supporters
Can-
of Trump.
What? I wonder what elections in November?
I think so.
Is that around? Would that be 6 months from today or 7? Because you could probably just, all things already. You could point to this absolute, regardless of what would happen, this absolute crumbling then after the election. You're absolutely right. And Kev, actually, I was going to ask you to kind of explain whether it was a SPAC or an RTO to some of the listeners who might not know. In terms of, what we see here, we do see certain companies that might go under, but there's still value in a trading symbol. And, those shell companies or companies that aren't really operating are still trading, and you can kind of invest in them. And then when they put other companies under them through an RTO or a different type of transaction, it's something I typically don't like because you don't really get a good insight into the cap table. And you don't really have a good understanding of who has what or what limitations there are on selling. So I'm glad you covered that.
Yeah, and that's a good point. And I could do 2 episodes just about reverse takeovers, using shells, SPACs, capital pool corporations. There's a lot to unpack. But the key thing for a listener that maybe isn't familiar with how this works is essentially some very name brand business person like Chamath Palihapitiya is a great example. He was a SPAC king back in the day. Somebody with a great name brand, known as an astute investor, more importantly, access to incredible deals, will become what's called a SPAC sponsor. And a SPAC is a special purpose acquisition corporation. And what they do is they basically raise a ton of money with no business. They're just people putting money into this publicly traded entity under the impression that whoever the sponsor is has the connections and aptitude to find an excellent deal to vend into the SPAC. So in this case, our sponsor was able to have, whether you want to say 7 or 8 million shares for free, in exchange for coordinating everything, which means finding the deal, bringing investors in. I have no doubt in my mind it's a massive amount of work. As somebody who's been part of IPOs myself, I can tell you that it is a massive amount of work, and this is something that's 100 times the size of something I would have worked on. The thing is, though, for new shareholders coming in, it's anything but a no-brainer, because keep in mind, up to 20% of the entire company that you're investing in is going to be priced at essentially $0. They will have gotten it for free. So the moment you invest, you're getting massively diluted immediately. You'd only do it because you think that you're getting access to a business that you would have never had a chance getting access to otherwise. Virgin Orbital, that was one. Virgin Galactic, that was a Chamath deal, and there's many others. So this is a SPAC just like any other. And if you want to go through, look at 100 SPAC charts, you're going to see a lot of them look very, very similar, opening at a crazy high price, jumping upwards, and then cratering down. Now, mind you, we're in a very different market now. That was in some of the worst days is when that happened. And a lot of signs are pointing to better times ahead. But I've yet to see a SPAC that's done significantly well. There's very, very few. So there's a lot of risk that you need to be certain of when you're investing in something like this. Okay, let's maybe pivot back to the app itself, because Pete, I wanted to come back to something you were saying. I actually, other than using the app, I don't know anything about users or what the trend is. Obviously, you mentioned that the trend in interest seems to be going down. How do you think that's going to impact like the long-term valuation of this business?
Yeah, if we were to potentially look at fundamentals, you need users to advertise to. Without users, you can't have advertising dollars. And without advertising dollars, you generally can't run a social network business. So if they don't find some type of way to get people not to just buy the stock, but to actually use the app itself, they're going to have a tough time paying the bills. So I think, I don't know if there's much going on in terms of all this news about the stock. I think it's everywhere you look. It was quite, the launch, but I don't think they're necessarily leveraging this to tell the story of what the app itself or the business is. So I think it's, in a way, it's a bit of a missed opportunity for them if they actually did have real plans of growing this user base and maybe making the app better, leveraging some of this into financings of raising more money, because they do not make money. That can only last for kind of, so long. And then maybe hiring some people who in the past who have really had a really good time, good experience of growing social networks. I don't know if really that's anything happening. So the overall outlook on this becoming, the next Facebook is not good.
Mm-hmm.
Yeah.
Declan, it seems like you might have a final thought before we move on to our next thing.
Yeah, I was just going to say, I think you brought up a good point from the story side of things. And, when you look at this business, a lot of the story right now is just associated with what's going on with Donald Trump at the moment. And this obviously takes away from the business itself. And again, it could be promoting free speech, having this open dialogue and everything, but that's not how people perceive it for the most part. Again, it is directly tied to Donald Trump. Whatever Donald Trump does, this is going to help impact the stock, good or worse. And so ultimately, yeah, like where the trend goes, I think, it'll again have constantly the loyal support of Trump's followers, but it's hard for me to believe that beyond this, that people will adopt this app when there are so many other platforms where if you wanted open dialogue, like Kev, you did say there has been an increase in censorship to some degree. But to be fair, you can still have a conversation. It just may not obviously be received well per se, which is unfortunate because you should be able to have a conversation with multiple perspectives and be willing to challenge it and also take feedback from it.
You know what's going to be an excellent example on censorship? This video.
Yeah, absolutely.
I was just thinking that. I'm like, if we're saying Trump and Biden and all that 100 times, YouTube is not going to let this run very far.
That is correct. So if you
So
see it, we would appreciate the share because
yeah.
we really wanted to talk about this topic, knowing what's going to happen. We've received some notifications in the past when we just mention anything about certain words. And I think maybe you'll see certain people are aware, big TikTok influencers are aware of it, and you'll see them not say certain words. Sorry, guys, we're not that advanced. We have to speak our minds.
Yeah. And I thought about how could we do this in such a way of not triggering any keywords, and we have no chance.
No, there's zero chance.
There's zero chance. And for that partly for that reason, we have another controversial subject that's just going to make this video
Yeah,
get
let's
even
keep
more
going.
limited
Let's keep
viewership.
going.
Let's just make it worse. So Germany has officially legalized cannabis. And Canopy Growth, if you've seen the stock, it has gone absolutely straight up and to the right on this announcement. They think that they can make they can become a top 3 player in Germany. For comparison, Germany's double the size of Canada, and currently Canadian cannabis sales is the biggest revenue line item for Canopy. So a few important points about this: cannabis is going to be recognized as a non-narcotic in Germany starting April 1st. Fully enabling legal consumption. There's already a medical market. They also think that medical market's going to grow as a result. Canopy sees this as an opportunity to expand its commercial presence in Germany, both through its brands and its medical business, but also they own Storz & Bickel. I'm not sure if you guys are familiar with the vaporizers. I actually have one in the other room. It's one of the best buys ever. I've had it for 15 years. It's an absolute beast. And the moment it dies on me, which it's close to, I'm going to buy another one immediately. Canopy owns that brand. Finally, the reclassification is expected to increase patient engagement with medical cannabis and prompt greater exploration of it as a treatment option for various conditions. A lot of people, even if something is medicinally legal, but recreationally illegal, it's going to stop a lot of people from trying it. If it's fully legal, I think people will look at this as a much more serious medical opportunity. So Pete, let's come to you. Considering the broader implications of Germany's decision, how do you think this is going to impact legalization and market dynamics across the rest of Europe?
I think Germany, typically being a little bit more conservative than a lot of the rest of Europe, is now taking a line and stance saying, yeah, let's do this. And I think you're going to have to kind of see probably other countries follow suit. I think you're going to see countries similar in GDP size and, political views, like let's say Italy, France, Spain. I think they let you do everything in Portugal already. And, some of those neighboring countries are going to follow suit because it is wild. Honestly, I think we're in Canada. It's always been pretty easy to score some pot here and not get in trouble for it. I go to Europe and it's just I'm like, what? Like it's like doing a real drug there. So like you can't get it. You cannot get weed like outside of Amsterdam. It's not easy. You're still dealing with like peddlers on the beach. There's not, I think some cities, like I think in Italy, there was starting to see some of that gray market where some of those like medicinal shops that opened up that take in regular customers, but it is not easy. And, the United States is a weird place because you go to, I don't know, 15 or 20 states and walk in anywhere, and some other states will, not allow it at all. You can't fly on it. It's federally illegal. But yeah, I think that the times are here. It's going to change. What that means for the stock is something completely else. I don't think Canopy will ever see what it saw in 2017, 2018 days. I think people have learned. I think wherever their total addressable market right now is getting them 500 million a year in sales. Is that about right? Yeah, 80 million a quarter ish. I don't know the propensity for Germans to smoke weed. I know Canada's quite high. No pun intended. Yeah. So I think investors likely would have learned, but I don't know. What do you guys think?
Well, to your point, I think the CEO did outline that it could potentially reach a $2.5 billion market. But as you said, this is once again really a highly speculative play that a lot of people are banking on the global spread adoption of weed and cannabis. And the thing is, again, you're banking on essentially putting your investment on the line and in the hands of somebody else's decision and control. And so you're not basing this purely on fundamentals. And again, if you were to look at Canopy, their fundamentals are quite dismal. They're not a very strong business, and that's not Canopy alone. That is something that extends throughout much of the cannabis market. And well, why is that? It's because they're essentially selling a commodity. There's not much in the form of differentiation. And sure, there are different types of brands, but my general belief is that consumers in this market do not largely care what product they're purchasing from, at least like from my understanding and experience. And it ultimately is like
You
it
got two
leads you to a
consumers
point
shaking
where
their heads.
well, it's yeah,
Well,
feel
there's
free
some
to
brand loyalty
go ahead.
already. Yeah, but keep going.
Well, sorry, I just to like wrap it up, I do essentially believe that like you are competing across a broad span, and one thing you got to look at too is like the deflationary nature of this market. So again, I'm going to stand on the belief that it is a commodity. There isn't much differentiation, and what's happening now is that since it's become legal, the price of cannabis has come down quite exceptionally. And why is that? Because everybody's competing, vying for the dollars, and there ultimately isn't that much differentiation personally. So I'm curious what you guys think, because that's interesting. You're competing.
We clearly both disagree. I'll go first very quickly. Calling no differentiation and calling it a commodity is saying that a $10 bottle of wine is the same as a $10,000 bottle of wine. Like, there's a reason why that things cost more and care. Kev, you go first. I have some thoughts as well.
Yeah, the wine example is exactly what I was going to say. I would say I agree in the sense that long term it should be a commodity. Technically speaking, these companies should be able to share around masters of horticulture or whatever the terminology is, and they should be able to optimize it, and everybody should be able to grow world-class weed as often exists on the black market. Where I disagree is that it has not gone that way at all. And in the early days, especially of cannabis legalization, honestly, the stuff you got at the store was crap. It was old,
Dry.
it was dry, moldy at times. Yeah, at times they were tearing down entire crops because they treated it like it was a soybean or wheat or something that was just this like densely packed commodity crop, when wheat is anything but that. It's this fickle little sissy plant that likes the temperature to be just right, the wind to be just right. It needs a little bit of stress, but not too much. It's a finicky plant, and those who are good at it produce a product that's not even close to the commodity version. So that's me agreeing and disagreeing with you. For the time being, I'd say the black market has produced, for the most part, better cannabis, even still, in my opinion. Pete, what do you think?
And I couldn't agree with you more. And I think the whole thing was so flawed from the start, right? Because again, this is a very finicky thing that you have to grow. So let's put this in perspective. They created, in Canada at least, and probably going to have this in Germany, and the US is the same, the most difficult regulated supply chain I think we had ever seen. I think it was tougher to like it was tougher than any pharmaceutical. It was probably easier to get opioids like out of a supply chain. The logistics they put in, from growing to shipping to storing to purchasing it to reconciliation to POS, they put all these like things on people. So it's very difficult to actually execute. And then these companies like a Canopy had some choices, I guess, to go get astute business people and logistics people. And those people were probably like, oh, well, you grew soybean, you're an agriculturalist, Look, at the end of the day, the only people that were ever going to be good at this were drug dealers and people who grew pot in grow ops and houses and stuff like that. And I think some of those people probably eventually decided to move this way when some of those jobs were being posted, and maybe they stopped doing background checks. But yeah, like that's what Kev's saying. When this stuff came out, it was too expensive and or shit. So there wasn't really a reason to avoid the black market of, the guy that might come over and drop a quarter at your house and stay for too long. But what it has done, and Kev, I'm sure you can probably appreciate this, the amount of innovation in the space is incredible, and that would not have happened without legalization. Like the vapes you discuss, and the ways that you can
and drinks and topical ointments.
Yeah,
it's wild. I haven't touched nearly any of that stuff, but it's insane.
Okay. Yeah, and that's been very interesting. For sure. And you can respect that innovation would have only happened with going legal and actually doing R&D and making a vape that doesn't blow up, and the effects of actually, I think, education of people understanding the effects, understanding the percentages of THC, because in that gray market area, if you could buy like edibles or something, I don't know, maybe a personal story. I didn't know what milligrams meant at the beginning when it said on that.
I can see where this is going.
Yeah.
Not gonna tell that story on this pod, but maybe if I get invited to another one. And even though, let's say it was the gray market, so they were all packaged, right?
Oh god.
So you'd see them and you thought you bought the same thing that you bought the last time, but you didn't read the milligrams, and you're like, oh yeah, I took 2 or 3 of those. Yeah.
Right.
So I appreciate the innovation and some of the guidelines and customer education that's happened with legalization, and the products got a lot better.
Yeah.
So I'm gonna
I had a
bounce
similar
back at you
experience,
guys.
Pete. I went to outer space involuntarily.
Okay.
Sorry, I was gonna bounce back these questions to you. So like first off, like would you consider in this market, and I haven't looked at the businesses too deeply, but would you consider Canopy one of the bigger players in the market right now? Just in general?
Oh yeah.
The biggest. The
If not
biggest.
the biggest.
Yeah.
Yeah.
Potentially the biggest.
And the only reason they're alive is because they attracted real money in the form of one of the biggest like alcohol companies in the world too.
Right. So I'm going to pose one more scenario to you guys. Like, so this is Canopy's current financial situation right now. They grew revenue by, I think, like 0.5% since 2020. They had a net loss of $1.2 billion. They have just $180 million in cash on their balance sheet right now. So this is the question or scenario outline is like, how, if you guys were the CEO of this company, how are you going to get this company at a point of profitability where it can maintain a competitive advantage? And what does that look like? What are those competitive advantages against other players in this market?
I could go first. I think they need to look at some lobbying here where they can really sell in terms of Canada. There are certainly some things that I think affect their gross margin. We really limit the amount that can be consumed, and obviously why governments allowed this was they wanted kind of their pound of flesh and getting tax. So there was a bunch of different ways that this was taxed. It was also affecting that price per gram. And if you're, let's say, your heaviest user, you want to enjoy the economies of scale, and that would keep someone on the black market. The economies of scale in Canada right now are not there. You really are not seeing any volume discounts, and that is really keeping their gross margins, very razor thin. And if they could imagine the costs of packaging, the packaging is just insane here in Canada. We are wasting, if you're an environmentalist, I don't even know how you can do this, right? The package on package on package, you can't even open it, the stuff.
Yeah, it's so irritating.
So the most you can buy is, I think, 3.5 grams, right? Which is a half quarter, which if you're, a big time enthusiast, that's not lasting you that long. So they need to figure out a way to kind of increase that, because then you're using less packaging, you're saving money on your supply chain, and you're, offering more to your best consuming customers. So they aren't really able to appeal due to some of the, laws or whatever are in place to actually help their business. So I think that would be one of the first things.
Mm-hmm. So just to bounce back, sorry, just before Kev is, like you outlined, a lot of these challenges are associated with things that like extend beyond the business. It's largely tied to the governments around them and the restrictions they impose. So I'm curious, like more than like, how do you differentiate the product itself so that they can really like make up that space? Because you did list one thing, economies of scale, but again, just going back, and obviously I'm trying to like shape a narrative that like I believe in, but that from an economies of scale standpoint, that is largely a competitive advantage that is tied with a commodity, because that's the only time and point where if you are producing more, you have a larger distribution network, you're able to sell at a lower price for a longer period of time. So again, I'm just like throwing it out there, like what is it in the product that you can differentiate that is ultimately going to get you to profitability if you're still at the mercy of the government?
I think there's going to be kind of three things where you either make the best product, hands down, and everybody wants it just because they've got a high tolerance and they're snobs like me and Pete and they just want the best. Or
Right.
you're going to sell the best price and you're going to get the consumers who are less particular and just don't want to pay an arm and a leg for it. That's kind of where I can see Canopy fitting in. The third will be innovation. Somebody's going to make some cool gummy that kicks in 12 seconds and wears off in 35 minutes, or a beverage that does something like that, or a patch because you don't want to smoke or eat, or you know what I mean? And someone's going to make some interesting products and they're already coming out and they're quite impressive. So I think Canopy's going for the economies of scale side of thing, because just like you said, sure, they've grown revenue. It's not not much over the course of the year, but they do have sizable revenue. And I think they're just trying hard to gobble up market share, make the Canopy brand known, lock in, agreements with distributors. And then
Mhm.
hopefully profitability comes after that. But as of now, they're not even close and they haven't shown any sign of trending in that right direction. Like if anything, things are just getting worse, no matter how I went through the statements and I adjusted earnings in so many different ways to remove one-time items or to remove certain things that could fluctuate, even the excise tax from governments. And I played around with it in so many ways. And just no matter how you slice it, it's just not like a good business fundamentally, which is what confused me so much about seeing this rally. So maybe Declan, I'll come back at you
Yeah.
with this. We're seeing this stock where all the talk was about bankruptcy not so long ago and kind of on the verge of bankruptcy, honestly, even still. Yet one announcement out of Germany, the stock goes absolutely mental. What do you think the German legalization of cannabis is actually going to do for their revenue and their long-term prospects?
Yeah, so frankly, not that much. I think it's obviously beneficial to some extent. And the real winners here are the citizens of Germany who actually get to, say, participate in this market and use these, like drugs in the sense that they can use it without worry and stress that sin. But again, it just goes back to the business model itself. Like if Canopy hasn't been able to reach anywhere near profitability, has a negative gross margin, and is there's no real clear sight to how it gets there, and it hasn't been able to successfully do that in the US and Canada more specifically, then how are they going to be able to do it, or what real significant impact is a market like Germany going to like open up for them? I don't see a big, again, they'll probably, like you said, Kev, they could potentially be the third largest player in the market almost immediately. That's fantastic. But again, now there's just going to be an influx of competition. You're probably going to get a lot of mom and pop shops in there that are selling and distributing as well. And who's to say as well that these European customers are going to adopt from a business that is primarily North American. Now, as you said, of course, they do have the partnership with Storz and Bickel, and that clearly is a German-based company. But I think the big question here is you're opening up entrance from anybody, and nobody really has a clear position, or in Canopy's case, even the cash to potentially like really like blow this thing up. So I'm very skeptical of it overall.
Yeah. The only thing I'd say you guys maybe both missed on a little bit in terms of commodity. This isn't a raw coffee bean, which people have figured out how to make that not a commodity. Is the power of brand. And there's a couple examples I can think of this. Do either of you drink vodka?
Mm-hmm.
What's your favorite
Yeah.
one?
I wouldn't say I'm super diehard, but if you're getting towards branding, I see where you're coming at. And I'd say the one I get most excited about would probably be Van Gogh, if anything. And branding is certainly part of that.
Well, it's just like, yeah, if I put out 10 shots of vodka, could you pick it out? Blind test?
No, probably
No,
not.
exactly. Right. And I mean, if you look at the vodka category, you have one of the best marketers ever kind of creating Grey Goose, right? He created a really great story and created his own category of super luxury and distilled it in France, even though the French know nothing about making vodka. Sorry if you're French, you guys are really great at wine and other things, but you didn't know anything about vodka. But this person played off of emotion and understood how to make a really nice bottle and create an entire new category. So would you say vodka is a commodity? No. I think what really hurt the long-term thing here was just greed, initial greed in the markets. And really, this went higher than it ever should have. Because otherwise, in a way, you're almost kind of saying to Marlboro in the 60s that they might not have a future because tobacco, because it's all the same, right? Like, I think some of those tobacco companies did okay.
Touche.
Yeah.
Yeah. Yeah. Well, and again, like the sustainability is the big question on my mind. I just, when I look at a business from an investment standpoint, I want to see a clear, definitive competitive advantage. And I'm not exactly sure what Canopy's is. Maybe they have some decent brands and they're getting, you know, wider spread adoptions than say the other players. But then my question is, why hasn't their revenue grown more effectively? Why do they have a negative gross margin? Why is their net loss so large? All these different things that you can, preach that, or Canopy could preach that, well, this is our technological advantage, this is our product advantage, this is our brand
Mm-hmm.
advantage, and yet it's not translating in any way to their financial statements. And they've had enough years under their belt now to somewhat, or they should have somewhat proven that they can outpace the competitors. And I don't see that.
Yeah, that's a very fair point. I mean, you do expect at a certain amount of time the buck has to stop somewhere and they have to switch into profitability mode because it's a business. And we haven't really seen that yet. Something I want to ask you about, though, you keep saying they had a negative gross margin. I did not even realize that. I was looking at the quarterly and I thought they had positive gross margin, at least on their earliest quarter. Is it
Mm-hmm.
the annual statement that shows a negative gross margin? Because I actually didn't look at the annual stats.
Yeah, that was my understanding, was that the annual stats over the past couple of years has been negative. It's good you raised it. That was definitely my interpretation, but probably good to fact check that just in case I am wrong. But
I wouldn't be surprised
ultimately,
though, because
yeah,
even if you look at the statements from like just the quarterly statements over like this year versus last year, in the past they were spending money like it was their full time
Oh,
mission was to find every way to blow money. It's comical looking at how the statements have changed. So unless I
right,
read something wrong, I actually think their positive
yeah.
gross margin now. I have 36% on the latest quarter,
So
so maybe they have turned that around just recently, which is interesting.
here I just pulled up the numbers quickly just so that we can clarify it. So in 2022, they made revenue of 510 million. They had a cost of revenue of 713 million. In
Oh,
2023, they had a 400 revenue of 402 million and a cost of revenue of 507 million. And then in the trailing 12 months, they had a total revenue of 362 million and a cost of revenue of 401 million. So just essentially like
wow.
summarizing that yeah,
but
it is negative.
But it, yeah, and again, I do want to discuss though the things going against them that might change again. The packaging would be likely included in their gross margin numbers, and spoilage, and them just trying to learn the logistics of how long does this stuff last, how when do they have to harvest,
Mhm.
how do they send this out. There was a big learning curve there, and I just think if they could potentially come up with an AI model, they could probably raise $2 billion off of that and be just fine.
Actually, Declan, do you have the latest quarter up in front of you? Because I'm curious if I was right there about the positive gross margin just for the last 3 months.
That's bad boy.
Um,
Um,
but while you're looking at that, just as like a little story time, if you guys remember, yeah, the early days, I don't know if I can't recall if it was Canopy. I think it was pretty much across the board reports of mold,
Mhm.
crops overgrowing way too much. Like there was a glut at one point. I know there are massive farms, maybe 30 minutes away from my house that were, I mean, massive, and they were completely shut down. So there was every headache in the book that's happened to this industry, which
mhm.
you can only hope you learn from past mistakes and obviously make the Canadian operations better. But I would say maybe there is some kind of competitive advantage when they do expand into Germany, knowing all the pitfalls of expanding into a new medical market, that I would hope they're able to bring that know-how into the market. And I think that would be certainly not worth zero. I think that is something important.
Yeah,
Yeah.
and just going back, so like you said, Kev, they're over the recent 3 quarters, actually, they have had a positive gross margin. So maybe the trend is turning around overall. And um, at least they've kind of resolved that standpoint of the business. They're still losing hundreds of millions of dollars a quarter, but I think at least they are figuring it out. And that's a great point that they probably will ease into this market a lot more efficiently than they said did over the past, and these growing pains that they've kind of overcame. It's just a matter of like, how are you, how long do you have? And again, they have 15% of their annual burn rate right now left in cash. So that would either, you would expect probably another equity financing round coming quite soon, or maybe they're acquired. But it's just one of those things that I think you need a lot of cash, and the only real clear advantage to me is if you can scale up so large that you're bigger than everybody else, and you can just squeeze out the competition by offering the lowest price, which again, it's a tough business model because your margins stay small, and it's already a market where, I mean, there isn't even a proven net profit margin quite yet.
And just to tack onto that, actually subsequent to the quarterlies, they did do a private placement in January of 2024.
Okay.
47 million. I believe that was the US. No, that was, I think I converted that to Canadian, but 47 million for these guys is nothing when they're burning as the way they are. It's already, I'm sure it's already long gone. So expect a lot more dilution. And one of the worst things that ever happened to these guys, and this is the same for a lot of startups, is you raise too much money. Because if you've seen executives given unlimited amounts of money, believe me, they will have no problem spending it. And you can only hope that going into Germany under some stress like this, I don't think investors are going to give them that kind of leeway. Like, it's got to be intelligent growth from this point forward, or this company gets acquired or bankrupt.
Yeah, okay. One or the other for me.
Well, I'm dying to get into the last topic. Last thing maybe I'll just say is that Germany actually, interestingly enough, is their second largest revenue market. So I can see why they're excited about that. But Canada is substantially larger still. Final topic today, I want to talk about GameStop. It's a stock that kind of needs no introductions. We're all familiar with it. I rewatched that movie, Dumb Money. Great movie. If you haven't seen it, it explains the whole GameStop saga, whether you're into finance or not. It's a very entertaining movie. But watching the craziness that happened there, it was a stock that rallied so high. That's where, diamond hands really became popularized. It was the meme stock of meme stocks. And so much so they made a movie about it. Unfortunately, they just posted their fourth quarter and fiscal 2023 results, and they missed. They were pretty awful, and the stock price has tanked. A few key points, fourth quarter net sales for GameStop, they dropped to just under $2 billion from just over $2 billion. Annual results say the same kind of thing. SG&A expenses, they decreased to $359 million. It's now represents roughly 20% of their net sales. Finally, despite the actual decrease in net sales, net income actually increased for the fourth quarter. So there's a lot to unpack on this. Based on these financials, Mr. Fundamental, what are you looking at as some of the biggest risks going forward?
Yeah, so I got to give them props. Over the past year, they have somewhat turned things around. They became net profitable, and then as well as generated a positive free cash flow. These are positive signs for a business, but I think you got to understand, and when you take a step back when analyzing this business, this profitability wasn't generated by organic growth within the business. It was by cutting back excesses within the company. And, they even recently outlined that they cut a number of employees over this period. They even have, winded down some of their real estate assets that perhaps were not as productive overall. So I think when you assess this business, and even what they outlined in their latest quarterly update, is that there is a lot of competition that are coming from multiple angles today. And really, realistically, it is going to be very difficult for them to turn things around over the long run, unless they essentially blow up their current business model and start as a brand new company. The thing is that if you are trying to purchase video games today, you have a lot of options across the board. You can buy on Amazon. You can buy through a physical retailer like Best Buy, same online through them as well. Or you can directly download these games from the platforms themselves. So whether you're buying on Xbox, PlayStation, or a computer, you can get your games right there. It's a digital copy. And on top of that, with cloud gaming now coming into the mix, it's taking up a lot less data and storage than what has traditionally existed in this market. And so now this company is left with, kind of this 20th century business model of a physical retailer. I would almost liken them to Blockbuster competing against Netflix in the early days, whereas now it's like almost Blockbuster versus Netflix today. That's what they're facing when they got to face companies like Microsoft and Sony and all these other like top gaming retail companies that can essentially just wash this business out. If you benefited from the rally and the short squeeze craze, congratulations to you. You did well. And I got to, again, tip my hat off for the company for surviving this long. But frankly, like, it just does not look like this company is going to be able to survive with its current business model over the long run. And that's the ultimate risk, is that you just have no competitive advantage. You have no real opportunity to turn things around because you've been so ingrained in your business model for so long.
I'd like to try to play devil's advocate on this one. But yeah, I think everything you mentioned is true. And that's why those shorts happened, that people kind of saw, the writing was on the wall and it's time to bet against these guys. The Blockbuster versus Netflix comparison is pretty much spot on. This was a place that, was primarily retailer, probably made money on some great accessories that you would go in there. And maybe if you weren't buying a full new PlayStation, there was things like memory cards, other controllers, all these other things you could get in addition to maybe a $50 to $70, $80 video game. When that moved to downloading from the PlayStation store or the Xbox store or Wii, and the physical discs were gone, there was no upside to going to a GameStop. So that, I think, really, really hurt them, because that was the reason to come back. I mean, the launches on the hardware once every couple of years, if you're lucky, where diehards will go line up for it. Other people might wait 3 to 6 months to just order it from Amazon and get it delivered to you, or order it from the manufacturer yourself. They, have done some things to cut a lot of costs, though, but without diversifying greatly and completely reinventing yourself, I don't know what options might be left.
I think you nailed it, really. Like, I'm not sure. I didn't really buy the turnaround plan in the first place when this was all happening. I'm on the record many times as saying it's not a company I believe in, although the squeeze angle was exciting for sure. That was coordinated market manipulation. It wasn't, long-term fundamental investing. Doesn't mean that kind of thing can't happen again and again, as we've learned. But, Pete, let me just jump back at you. We talked about their net income actually increased in spite of the revenue slump. Do you want to talk a bit about what actually drove that profitability?
Yeah, I think Declan covered a lot of it. Like, they were just really looking at cutting a lot of that SG&A that they didn't need and really trying to get these things as lean as possible. How much more can they really cut, without seeing increased revenue, or then, fundamentally really seeing a lot of closures and maybe eating some of the leases on those retails? Because at the end of the day, there's probably some really sick puppies in the bunch. And, I don't know, like, can you do some partnerships with some of the gaming companies yourself and create an experience? Because that's the only thing that, we might see that could work, is really that experience. And is there a GameStop partnership to create, like, I don't know if you guys have seen the Cineplex Rec Rooms, something along those lines, and get into that type of business. Other than that, I can't really see it.
Yeah, I'm curious as well. Maybe all stores are going to be turned into internet cafes, and they can bring LAN parties back. Who knows? Sometimes old is new again. And one thing I was wondering if you guys would mention, they barely made profit. So let's make that clear. But also, it's because from their investments, they're actually earning interest income. They earned $50 million of interest income. If it wasn't for that, like, the operations of the business still lose money. So the business isn't back. The business isn't healthy just because it's a profit. The only thing they got going for them, they got a ton of money. They raised an enormous amount of money that's going to stave off bankruptcy, but revenue drops every year. They're not a operating cash flow positive business. I don't see it going bankrupt tomorrow, but it feels like a matter of time. I would love to see some creative turnaround story. I just, like what you said, I just don't know what they do with the stores, with the physical model. That's just so blockbuster. That I'll be very curious to see how this shakes out. I wouldn't buy it, but I probably wouldn't short it either. I feel like there's some PTSD from what happened last time that I'd be too scared to short. But yeah, I don't know. It's
Yeah.
not an obvious one to me.
Well, and I just recently finished Peter Thiel's book 0 to 1, and then also Reid Hoffman in Blitzscaling. And a big thing they talk about is distribution. That is essential, especially in a business that is not profitable or is trying to scale. And I mean, to be fair, GameStop is a mature business, but they're in a position now where they need to scale or figure things out. And when you look at GameStop's distribution options, like you are not going to see them marketing and promoting this product anywhere on television, on streaming sites, even online. And they really can't, they don't have their own product per se. They're selling other people's products almost as a third party, right? Whereas if you were to look on an Xbox or a PlayStation right now, it's just like a Netflix screen. I can see all the video games possible that I can choose from. Not only that, but a lot of the time they put them on sale. And then they've also started offering these Game Pass deals. I don't know what PlayStation's is called, but where you can subscribe for $20 a month and play any game you want for as long as you want, and essentially just have it there for way less than you would paying these $100 per video game. So the distribution factor when it comes to GameStop is almost like nil. I don't see any way they can really market their business or product aside from, again, you're walking down the hallway, let's say in a mall, and you